Hello everyone. In today's class, I want to teach you guys the strategy I use in trading. Although I've not been profitable with it yet, but definitely I will because consistency is the key. You get this strategy you all know. It's called the top down plus supply and demand strategy. Top down plus supply and demand strategy. What I mean by the okay, let me explain for you now. What I mean by the top down is you starting from a higher time frame, analyzing your chart from a higher time frame. You get down to your lower time frame, which is your entry. You get me? So that's why they call it the top down analysis. The top down analysis. Then the supply and demand. The supply and demand. Many traders do misunderstand supply and demand, support and resistance. You get that's actually what they do misunderstand in trading. So let me explain for you. Resistance is a place where price rejected multiple times. You understand me? Price rejected at that resistance multiple times. It's like a ceiling. You understand? It's like a ceiling in the market. It's like a ceiling in your chart. Price rejected multiple times. So there is high chance probability that if price gets to that point again, the price is going to drop down. That's what they call resistance. So supply is a newly area where price just rejected. That price haven't reversed to reject again. You understand? Supply is a newly area where price just rejected. The price haven't go back to reject again. You understand? So most traders do actually misunderstand supply and resistance. So for me it's a kind of two different things. It's a different things. If you can see this chart very well, you can see here. Let me draw a line. This place I draw this yellow line is our resistance. You understand? Is our resistance at this chart. This is Euro USD. Is our resistance at this chart. So here, this is a newly area where price just rejected. A newly area where price just rejected, and it's going to be our supply. It's going to be our supply zone. See it? Is it if you think of it like if price gets to this supply zone, it's possibly going to drop down. You understand? It's possibly going to drop down to this demand zone. It's possibly going to drop down to this demand zone. So that's what you actually call top down plus supply and demand analysis. You get top down plus supply and demand analysis. Now let's go straight to the chart. So analyze this chart. So first, head on to your 4-hour time frame. Most people normally use daily time frame, but me, I do use this. I do use a 4-hour chart. Why use 4-hour charts to analyze? First, you look for the trend. You understand? You look for where the trend is heading to. As you can see here, the trend is giving us a break of structure down to the a break of structure to the downside. You can see this trend is absolutely bearish. The trend is bearish here, so it's giving us a break of structure down to the downside. So in this case, we already know our trend. We already know that the trend is going down. The trend is in a downtrend. So at this point, you mark out your resistance. You get? You mark out your resistance. You mark out your resistance, which is this. Which is this. Price have come to reject this resistance multiple times, and there is high chance probability that if price go back to this resistance again, it's gonna drop. You can see the price rejected multiple times here, so if there is high chance probability that if price go back to this resistance, it's gonna drop. So we head down to our 1 hour time frame. We have already marked our resistance zone at the 4 hour time frame. Remember, I'm teaching you guys the top-down analysis plus supply and demand. So let's head on to our 1 hour time frame. Our 1 hour time frame. See? Our 1 hour time frame. Here is our supply zone at our 1 hour time frame. You can see our supply zone at the 1 hour time frame here. So there is high chance probability that if price gets to this zone, it's going to drop down. You understand? It's going to drop down. Why I mark this resistance because price rejected it already multiple times. It's like a ceiling. Price already rejected it multiple times. So here is our supply zone. Here is our supply zone at the 1 hour time frame, which here is our demand zone at the 1 hour time frame. The big institutional traders do use the higher time frame to actually place their orders. So why you use lower time frame is because you need a quick entry. You understand? You need a quick entry. So the price is actually approaching to the demand zone. So once it gets to this demand zone, it is likely to bounce back up to this supply zone, because this demand zone is a newly area price just tested in the 1 hour time frame. Is a newly area price just tested in the 1 hour time frame. So once it gets back to this demand zone, we have a high chance probability for it to go back up. You understand? To go back up to this supply zone. You understand? So this, if you did a quick entry, you head down to your 15 minutes time frame. Head down to your 15 minutes time frame. So your 15 minutes time frame tells you when to enter. You understand? Tells you when to enter. The price is approaching the 1 hour demand zone at this point. Then once it's approaching, you have to buy, but you don't just buy like that. You don't just go in because you see a price touches the demand zone, you just want to buy. No. First of all, you wait for the price to hold. If the price hold at this demand zone, because there is still another demand at the down. You understand? This is the demand zone here. So if you wait for the price to hold, that means that's taking all the set side liquidity at this demand zone. You understand? So if you're taking all the buy side liquidity at this demand zone, then it's going to move up to this resistance. Okay, to this resistance zone. So you have to wait for the price to come down to this demand, to test this demand zone, to take all the orders here, then hold. If it hold, then then you wait for a change of character on a lower time frame. That's when you go to a 5 minutes time frame, go to your 5 minutes time frame or 3 minutes time frame to look for a change of character or a break of structure. For the main confirmation, you might even wait for a change of character plus break of structure to give you a very nice confirmation. And it's not to give you a very nice confirmation for you to go in for a buy. So this supply zone. This is a downtrend. This is a downtrend, but inside a downtrend, we still have a room to place our buy trades. You understand? We still have a room to place our buy trade. So once the price gets to this supply zone, we are looking for a sell down to this demand zone. You understand? You're looking for a sell down to this second demand zone because it's gonna break this 1 hour demand zone down to this second demand zone. So that's just it. It's really the top down analysis plus supply and demand is kind of simple. First, you start from the higher time frame. Most people do start from 4 hours. Most people start from daily, but me, I do start from 4 hours time frame. So you start from the higher time frame to know where the trend is heading to. Yes, to know where the trend is heading to. If the trend is up, then you should be looking for a buy. If the trend is down, then you should be looking for a sell. But if it is down, you still have a room to buy. If it is up, you still have a room to sell. So that's it, based on the way you analyze your trade. So yeah, I hope I cleared you guys on something. So just comment the analysis you do use. Comment the analysis you do use, and let's see. And comment the next video you want me to make. Let's actually see. So thank you for watching, and make sure you like and follow to subscribe.